Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you. Good afternoon.
So South Korea and Japan held talks yesterday in Tokyo on trade. While there was no real concrete outcome, they're going to keep talking. Tell us a little bit about that meeting, and do you think this does anything to relieve concerns in the market about this trade dispute?
Sure. I think definitely it is positive news. South Korea and Japan on Monday agreed to continue talks to resolve their various differences, and they have said that it is expanded a mutual understanding of each other's export control system. As you know, there has been a lot of discussion regarding the trade dispute, and that has caused quite a bit of concern regarding the Korea's semiconductor business as well as various other export-related businesses. And that has caused the concern about Korea might be going to the recession in the future, as well as the concern for Japan as well. All in all, these things were somewhat politically driven as the Jisomia results was coming through before, and that caused the concern that the unsettlement between the Asian major countries such as Japan and Korea. However, in the future, we think that there will be more negotiation will be happening. It is net any type of dispute that happens in regards to trade is actually losing factors for both countries in any countries that were involved in a trade war. So we think that the positive indication will be the sentiment that the so far big the fight that has happened between the Japan and Korea and the concern by the citizens will probably somewhat go down in the future in terms of the level of the dispute that's happening. So therefore, we think that the overall equity market, overall economic conditions should be benefiting due to the talks that are happening between these two countries.
Right. Well, other positive news led stocks on Wall Street to start the week with yet more new all-time highs. What's the story there and in the markets here in Asia?
Sure. If you look at U.S., a net 7% of stock on NASDAQ and New York Stock Exchange hit the 52 weeks highs in last week. This is definitely a very bullish sign for the market. That's because the sentiment regarding the trade dispute has become much better for the market that they have signed the first phase of the trade deal. The traders are saying basically these kind of indications that signaling the further growth of the equity market in the future. In terms of looking at the cyclical side of the things, if the policy trade dispute is actually going to the right direction, if that's the case, the global economic slowdown that we saw this year should start to show next year's recovery. If the recovery happens, then the earnings growth rate for the most of the companies should benefit as well. And if that's the case, the rally should continue to happen in the future. The key factor has been that the short-term, long-term interest rate differential changes that affected the possibility of economic recession going into the future, that perspective has totally changed with this deal. We think that the year 2020 should be a year where economic growth rate slowing down should stop and maybe show some kind of slight recovery. And if that's the case, then overall equity market should continue to do well in the future.
Well, now, meanwhile, the exchange rate between the Korean won and the dollar has been pretty volatile recently. The won to the dollar is down a couple percent in just a few weeks. What's happening there? Sure.
If you look at the Korean won currency, it hit as high as 12.23 and it hit low as 11.56. And then once again, it rounded to 11.95 and then now back down to 11.60 territories. The reason why this is happening is because we think that fair won to U.S. dollar rate should be somewhere between 11.50 to 11.70 territories. Given the fact that Korea economic growth rate is at 2% plus, whereas pretty similar to U.S.'s economic growth rate of about 2.1%. So we don't think that the currency should aggressively depreciate or appreciate. We think that the range bound should be happening in the future. If the range bound continues to happen, that means that foreign investors should be net buyer of the Korean equity market because the undervalued valuations that you see in Korean equity market. With the fiscal budget passed and the monetary policy being easing and continue to boost the economic growth rate, we think that foreign investors' net buying of the Korean equity market should continue in the future. If that's the case, then we do think that Korean Kospi should start to hit maybe as high as 2,400 level next year.
All right, Mr. Yu, that's where we'll have to leave it for today. Thanks so much for making time. We appreciate it.
Thank you very much.